What do you say? How big is this? Is it a tweak or a tide change?
It is a tide change. I mean, the train has left the station now. It's very clear that the signal that the BOJ is sending here is that they are going to allow JGB yields to move higher. And this does have important implications because Japan is the biggest holder in the world of U.S. treasuries. They own more than $1 trillion of U.S. government bonds. And that is, of course, the risk looking ahead that if we are going to see an asset allocation change where Japanese investors will begin to take money home from U.S. fixed income markets to their own backyard in JGBs, where yield levels are now higher. That will, over the coming months ahead, likely have some implications for, in particular, U.S. rates.
Well, Torsten, good morning. As we were just hearing from Enda and as we heard from the governor himself overnight, he was trying to indicate this is not tightening. This isn't even really normalization. What does the path toward actual normalization look like now going forward, now that they've made this tweak, if it is indeed a tide change, as you say?
Yeah, no, and that's important, and it makes sense, of course, that when you had a policy in place since 2016, where essentially the BOJ has been trying to keep JGB yields at very, very low levels and have successfully kept JGB yields at very low levels. It has come at the cost of very significant interventions. Japan, in this case, the Bank of Japan owns more than 50% of all JGBs outstanding. So in some sense, it was unsustainable to continue yield curve control. So it's not only because inflation is very high that is the reason for this tweak or change. It is also that there's very little liquidity in JGB markets, and their ownership had gotten up to very high levels compared to other central banks. And because of that, one step at a time. But the clear issue here is that that step is certainly in the direction of allowing JGB yields to move higher.